Now, the second one is Nvidia. Why? Because the Supermicro news also affected Nvidia. What also affected Nvidia today, it's currently up about 2.9%, is Google Alphabet's $75 billion announcement in CapEx spending that may be contributing to Nvidia's on the upside. Remember, here's the stats from this earnings season. Microsoft, $80 billion in CapEx spending for fiscal 25. Meta Platforms, $65 billion. Now Google Alphabet, $75 billion in CapEx spending. So the paper money trade we looked at for Nvidia, remember this stock has sold off, the last few weeks from as high as 153, now then into 140s, and now it got as low as, in the teens for a while there. Now it's sitting around $122. By the way, the 200-day moving average, $123. Watch for that number, pretty significant there if you're a technician. Okay, so the paper money trade we looked at going out to the March 7th expiration. Why is that? I'm going to talk about that in a minute. Remember, it's got earnings on the 26th of February. So I went past that to the March 7th expiration and bought the 120 call, sold this week's February 7th 125 call. The debit on that, about $9.25. Let's see if it's moved. No, it's about $9.20 right now. So this is, again, both trades, call diagonals, both trades. The risk is defined by the debit paid. Both trades, you're going to have an opportunity to extend duration on the trade if you so desire to do that. So call diagonal in Supermicro, call diagonal in Nvidia, both collecting theta, both risks defined, both targeting a short strike above where they're trading right now. So bullish trades in Supermicro and Nvidia.
Given their capacity to execute large-scale computations concurrently, which enables businesses to rapidly train and implement AI models, Nvidia's GPUs are the fundamental building blocks of AI data centers. Therefore, Stargate's aggressive investment strategy should perfectly aid in expanding the chipmaker's addressable market. To train AI models in the cloud, Oracle, for example, has been using Nvidia's GPUs to build AI infrastructure that it can rent to clients. Ellison said in September of last year that one of Oracle's 800-megawatt data centers will include acres of Nvidia GP clusters that can train the biggest AI models in the world. Following this, Oracle CEO Safra Catz stated at the December 2024 earnings conference call that the business has delivered the fastest and biggest AI supercomputer in the world, capable of scaling up to 65,000 Nvidia H200 GPUs. In addition to its current 17 cloud locations, Oracle plans to expand its global footprint by another 35. The company's growing interest in Nvidia's GPUs won't come as a surprise. More significantly, Nvidia should be able to fulfill the increased demand for its processors that is anticipated to follow Stargate, because it has been collaborating with its supply chain partners to boost the output of its AI GPUs in 2025. In the meantime, companies like Microsoft and Meta Platforms will not reduce their investments in AI infrastructure in the wake of DeepSeek's success. Both businesses think that significant investments in AI are necessary to meet the increasing demand for AI applications, as evidenced by DeepSeek's demonstration of the potential for more effective models. After seeing strong order growth and receiving far more bookings than Wall Street had anticipated, the Dutch semiconductor equipment manufacturer ASML proposed something similar. All of this points to the possibility that the AI investment climate will continue to be strong, which might support Nvidia's release of strong results and recommendations later this month. As of right now, analysts anticipate that Nvidia's sales will rise by 52% to little over $196 billion in fiscal 2026, and then by 21% in fiscal 2027. However, given the explanation above, anticipate seeing those forecasts rise, opening the door for further growth in Nvidia's stock. It is important to note that 66 analysts that follow the stock have set Nvidia's 12-month price objective of $175, which indicates 46% gains from present levels. Recent increases in Nvidia's revenue projections for fiscal years 2026 and 2027 may be sustained by the company's ongoing investments in artificial intelligence. Consequently, Nvidia's price objective may potentially be revised upward. Because Nvidia can recapture its mojo, Investors who have been on the sidelines and are unsure if it is wise to purchase shares of the company after the impressive gains it has produced in recent years could want to do so now. Given that the tech-heavy NASDAQ 100 index has a forward earnings multiple of 27, the stock's ahead earnings multiple of 23 is quite appealing. Because of this, purchasing Nvidia today can prove to be a wise choice because of the company's strong earnings growth trend. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
What do you think about the pace of innovation at a company like Nvidia? I mean, they've really consolidated seemingly their position in chips. Of course, you have AMD doing fine work too, Broadcom, Qualcomm, but they seem to really be out in front. I imagine you have some thought on that, given how in front Microsoft was making software.
Well, if you say, what are the 7 most valuable companies in the world, put aside Aramco, they're all these tech companies, and the newest arrival to that list is Nvidia. And the fact that Jensen doesn't even make his own chips, that everybody has TSMC available is all the more credit to him that at the design level, the silicon, the buses, the interconnects, the way they've done things is pretty fantastic. Now, I would say, I wouldn't want to be Jensen necessarily because, wow, other people are working on the same things. But, so far, he has stayed way ahead. And, Microsoft is an incredible customer, always, wanting to get as many of his chips as they possibly can, while at the same time, like other big tech companies working on their own AI chips. So I think it's pretty hard to predict, but right now, it's unbelievable how well he's done.
And we're going in a little bit into
Meta Platforms purchases a lot of AI chips from AMD and Nvidia. Investors who own stocks in AI hardware should be pleased with a set of remarks made by CEO Mark Zuckerberg on January 29th. For years, the prosperous Chinese hedge fund High Flyer has been developing trading algorithms with AI. In 2023, it founded DeepSeek as a distinct business to take advantage of the success of other AI research firms that were seeing their values skyrocket. DeepSeek's V3 large language model, LLM, which matches the performance of the most recent GPT-4o models from America's top AI startup, OpenAI, across many benchmarks, was the catalyst for last week's stock market panic. At face value, it isn't a problem, but according to DeepSeek, it only spent $5.6 million training V3, while OpenAI has spent more than $20 billion since 2015 to get to this point. To make matters worse, the U.S. government has prohibited the sale of the newest Nvidia data center GPUs to Chinese companies. Thus, DeepSeek is unable to obtain them. This suggests that it is possible to train top AI models without the greatest hardware, as the startup was forced to employ outdated models like the H100 and the weak H800. DeepSeek innovated on the software side by creating more effective algorithms and data entry techniques to make up for the lack of processing performance. Additionally, it used a method known as distillation, which is training smaller models with a successful model. This drastically reduces the amount of CPU power needed and speeds up the training process. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
About the valuation problem, how are you actually looking at valuations at this point in terms of the overall market?
Yeah, no, it's a moving target, of course, because prices change every day, and particularly in an earnings season, earnings change every day. But just in general terms, you look at a group like the Magnificent Seven with a forward PE in the high 20s. You look at the overall cap-weighted S&P with a forward PE in the low 20s. Then you go to the equal weight S&P, and you're in the high teens. So even with equal weight, you're still on the richer end of the historic spectrum. But the one thing I always want to tell people about valuation, it's good to have as a back pocket sort of issue from a knowledge perspective. It can represent a backdrop risk, but valuation is a terrible market timing tool. Not to suggest that there is any really good market timing tool. There isn't. But valuation, if you have a 10-year look forward and you were to track starting PE ratios on a forward or a trailing basis and then look at subsequent 10-year returns, there is a correlation. So I think valuations can help you in trying to gauge longer term returns. But if you do any starting point PE, forward or trailing, and then look at subsequent 1-year returns, there's almost no correlation. So valuations can get rich, get even richer, get more ridiculous until something happens. There's a catalyst, something maybe even sentiment driven. So it's more of a back pocket thing to be mindful of, as opposed to sending some moment in time signal of either get in or get out.
Rapid developments in artificial intelligence, AI, the growth of data centers, and consistent breakthroughs in machine learning-powered autonomous systems propelled a broad spike in U.S. tech equities in 2024. Large numbers of institutional and ordinary investors were drawn in by this momentum. However, significant U.S. tech companies have had early difficulties as 2025 progresses. Early in the new year, market volatility has been exacerbated by the emergence of China's DeepSeek chatbot and a fresh round of tariff proposals from President Donald Trump intended to restructure international trade. Although it's never fun to watch your net worth drop, long-term investors have appealing prospects as a result of current market dip. I'm seizing the opportunity to purchase and hold on to one of the leading brands in artificial intelligence for the long term. Find out which item is at the top of my list of things to buy this month by reading on. As of this writing, Nvidia's stock has fallen 13% since the beginning of 2025, but analyst projections indicate a whopping 49% upside potential over the following 12 months. Although confidence has been affected this year by worries over China's DeepSeek chatbot, Morningstar analyst Brian Colello says this is a healthy adjustment rather than a significant change. I envision this leading to greater market expansion, even though DeepSeek's effective AI models might occasionally eliminate the requirement for large clusters of graphics processing units, GPUs. Similar to how the PC and cloud computing waves were sparked by falling processing costs, the optimization of AI infrastructure should hasten industry adoption. Nvidia's superior GPUs and Compute Unified Device Architecture (CUDA) software, which has emerged as the cornerstone of AI development, are the main sources of its competitive edge. Nvidia has a strong competitive moat because of CUDA's deep integration into the AI ecosystem and the high cost of platform switching. Nvidia's market position is strengthened by its strategic forays into business services, software platforms, and AI networking in addition to GPUs. I think this price drop is an alluring chance to invest in a business that is redefining computing's future, especially considering the speed at which AI usage is increasing and Nvidia's growing technological supremacy. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.